Hello, everyone, and thank you for joining today's True Trading webinar. I'm excited to be here with you. My name is Mohammed Azim from Traders United. Press disclaimer. True webinar house rules. Please take the time to read important rules for webinar attendees. Let me start by sharing a little information about myself. I am a certified Elliott Wave analyst, having earned my level 1 certification back in the year 2012 with a score of 93%. This certification deepened my understanding of market behavior, especially through the lens of Elliott Wave theory. In addition to my work as an analyst, I am also an author and educator. I wrote Introduction to Elliott Wave Theory, a book designed to help traders like you build a strong foundation in understanding the intricate structure of market waves. But my expertise does not stop at Elliott Wave. Over the years, I have expanded my knowledge into broader market analysis, diving deep into market trends, chart patterns, and price action strategies. So, whether you are a beginner or an experienced trader, I aim to provide you with valuable insights that will help you navigate and succeed in the Forex markets. With that, let's dive into today's session. These are the main topics that we are going to cover inside today's webinar. Okay, let me talk about macroeconomic events and data releases, and I'm going to cover previous week fundamental analysis. Okay, the macro events and data releases, we're going to discuss the previous week. So let us start with the first one, German Flash Manufacturing PMI overview related to Euro. And next one is the core durable goods orders month over month related to US dollar. And again, the Euro USD. So let us start with that. Now, what is the German Flash Manufacturing PMI? The German Flash Manufacturing Purchasing Managers Index, also known as PMI, is a key leading indicator, and this economic indicator provides early insight into the performance of Germany's manufacturing sector. Compiled from surveys of purchasing managers, it evaluates factors such as production, new orders, employment, supplier delivery time, and inventory levels. As Germany is the largest economy in the Eurozone, its manufacturing activity significantly influences broader regional economic conditions. A PMI reading above 50 indicates expansion, while a reading below 50 signals contraction. German Flash Manufacturing PMI report that we got on July 24th. The previous number was 49, forecast was 49.4. The actual number we got is 49.2. Now, the market expectations was that the economists had expected a modest rise to 49.4, suggesting a slight easing in the pace of contraction, while still below the 50 threshold. Such an outcome would have hinted at tentative signs of stabilization in Germany's manufacturing sector. Now, the potential market impact on euro dollar is if PMI exceeds, you get greater than 49.4, that's a stronger than expected result, could boost the confidence in Eurozone growth prospects and ease expectations of further ECB easing. This would likely support the euro and push euro USD higher. If PMI meets the forecast, we get 49.4, that result is in line with the expectations would likely generate limited move in Euro USD unless other components such as input prices or future output expectations surprise the market. Now, if we get a less number below than 49.44 number, that's a weaker than forecast reading, would highlight persistent challenges in the manufacturing sector, potentially strengthening the case of a more dovish ECB. This could weigh on the euro, putting downward pressure on euro USD. Now, on July 24th, the German Flash Manufacturing PMI was closely watched by traders focused on the euro USD. Despite a slight improvement from the previous month, the actual figure of 49.2 came in below forecast, reinforcing concerns about ongoing weakness in Germany's industrial base. This disappointing outcome lead to a decline in euro dollar currency pair. So the euro dollar dropped as forex traders reacted to renewed downside risk for the euro and growing speculation about ECB policy support. So after the news announcement, we got overall drop in price action. Okay, so euro dollar currency pair is going down, looks bearish. The daily chart still look kind of bullish, but overall, if you check out this scenario, we got this rally, then we got a strong leg to the downside. It even took out uh, this low over here as well. Okay, next one is the core durable goods orders month over month. M or M stands for month over month. Friday, July 25th, 2025, the economic activity snapshot. Let us talk a little bit about what are core durable goods orders. Core durable goods orders month over month measures the monthly change in the total value of new orders placed with US manufacturers for long-lasting goods, excluding transportation items such as aircraft, which tend to be volatile. This indicator serves as a key gauge of business investment and future manufacturing output. An increase in core orders typically signals growing confidence and demand in the USA economy, which can strengthen the US dollar. Conversely, a decline may indicate reduced business spending and economic uncertainty. Now, the previous number we got is 0.6%. The forecast was 0.1. The actual number we got is 0.2. Now, the analyst had forecast a modest increase of just 0.1% as compared to the previous month of 0.6, reflecting cautious business sentiment amid economic uncertainties. A flat or minimum gain would have pointed to stagnating capital expenditure and raised questions about the strength of economic momentum heading into quarter number three, the yearly quarter number three, I mean. So potential impact on Euro USD is, well, we got a 0.2% number. So the July 25th core durable goods orders came in at 0.2%, which is obviously slightly above the forecast. Now, if we got the same number, 0.1% number, that was the result in line with the expectations and is likely to have limited impact unless other data points such as headline, durable goods, or previous revisions surprise the market. Okay, and what happened is we got the actual reading that exceeded the 0.1%. We got a 0.2%. Now, this print 0.2% reflects robust business investment and resilience in the manufacturing sector. This outcome supports expectation for a hawkish Fed stance, likely boosting the US dollar and pushing the Euro USD lower. So what happened is that we got a 0.2% number, slightly above forecast, and indicating continued, if modest, strength in the US business investment. This positive surprise reinforced US dollar bullishness and led to a drop in Euro USD. Here's the chart of Euro USD. You can see right now, even as of today, it's falling down. If you check out the daily chart, this is where all of this started. So market started the decline in Euro USD, and I expect further weakness in price action. So the Forex traders adjusted their expectations for Federal Reserve policy moving forward. Market participants will be closely watching additional US economic data and Fed communication to confirm the trajectory of monetary policy and its impact on currency markets. Next one, previous week global market trend. First one is the euro, then we have euro USD, then we have the US dollar versus Swiss franc. Okay, let us take a look at euro dollar. So in daily, I already mentioned price action is falling down inside euro dollar currency pair, and the chances are high that price action is going to drop even further. But the trend is still up in daily time frame. It's not a downtrend. However, in 4-hour chart, obviously, market is falling down over here. This looks like we've got a nice downtrend over here. Now, this means if Euro USD is falling down, then expect a bullish price action inside US dollar Swiss franc currency pair. And this is exactly what we got. If you take a look at this daily time frame, I understand that market is still below this old swing high over here, but it's moving up. If you take a look at 4-hour chart, this is where we just got a breakout. Okay, so I was expecting last week, we were expecting a pullback, and then once the pullback is over, USD Swiss franc is going to rise up more, and this is what exactly we're getting it. Next, let us talk about the macroeconomic events and data releases, the current week. We're going to now discuss the current week. Okay, the first one is the GDP, gross domestic product, month over month related to Canada, USDCAD. This is what we are going to discuss. And then an important news related to USA, the non-farm employment data report. Some people call it NFP. NFP, just a short abbreviation, just a short name of non-farm payroll data report. So this is what we are going to discuss now. Okay, let us start with the GDP month over month related to Canada. Now, what is Canada's GDP M over M? M over M stands for month over month. In Canada, gross domestic product or GDP is a vital economic indicator that measures the monthly change in the total value of all goods and services produced within the country. If and it serves as a timely gauge of overall economic activity, signaling whether the economy is expanding or contracting. Now, the report is basically published by Statistics Canada. The report covers this financial report covers a broad spectrum of industries including manufacturing, services, construction, energy, and more. As a commodity driven economy, Canada's GDP is particularly sensitive to global demand and price shifts in resources like oil and natural gas. A positive reading points to economic expansion, while a negative figure signals contraction. Traders and economists closely monitor this release for insights into economic momentum and to anticipate potential policy shifts by the Bank of Canada. Okay, now we got this monthly report, but the number isn't out yet. The previous number we got is 0.1%. That's the last month number. The forecast is again minus 0.1%. The actual data not released. So markets are bracing for a mild contraction in economy with GDP forecasted to decline by minus 0.1%. Following a slightly negative reading in the previous month, the subdued outlook reflects ongoing concerns about weaker domestic demand, sluggish industrial output, and global trade headwinds. Canada's reliance on resource exports also adds pressure aimed soft commodity markets. Now, the potential market impact that we are looking related to US dollar CAD is if GDP is higher than expected, minus 0.1%, a strong reading would suggest unexpected resilience in the Canadian economy, potentially reducing the urgency for Bank of Canada rate cuts. This would likely strengthen the Canadian dollar, pushing USD-CAD lower. If GDP matches expectations like minus 0.1%, a result in line with forecasts may lead to limited market reaction, with traders shifting focus to US data or upcoming central bank commentary for further direction. If GDP is below expectations, like less than 0.1%, then it means a weaker than expected print would raise concerns about deepening economic weakness and heighten expectations for Bank of Canada easing. This would likely pressure the Canadian dollar, driving the USD CAD higher. Now let me show you the chart of USD CAD currency pair. So here is a chart of USD CAD, and currently USD CAD is trying to rise up over here. Okay, is coming out of this box over here. We might get even a new high over here, especially the way price action is going up. If you check out this downward sloping trend channel, price action is already out of this bearish trend channel. So this is telling me USD CAD is going to rise up. Back to the slide. So overall analysis is as the Bank of Canada balances the dual challenges of controlling inflation and maintaining economic growth, this GDP release will be closely watched. A deviation from expectations could significantly impact rate outlooks and move the USD CAD pair, especially if it changes the perceived trajectory of Bank of Canada policy. So the conclusion is until the data is released, USD CAD may remain in a narrow range driven by caution and external sentiment, or it could slightly go up a little bit. However, a surprise in the GDP reading could trigger sharp moves. A stronger result may lift the loonie, while a weaker print could lead to further Canadian dollar weakness. Next one is the August 1st NFP report, non-farm payroll data report related to USA. And the USA key labor market, it's a US dollar, I would say it's a United States of America key labor market indicator for euro dollar traders. For those traders, for those currency traders who are trying to trade the euro dollar currency pair, this is the most important news announcement to watch it. Now, what is the US non-farm employment change, the NFP? Non-farm employment change, commonly referred to as non-farm payrolls, NFP measures the monthly change in the number of paid employees in the USA, excluding farm workers, government employees, and those employed by non-profit organizations. Released by the US Bureau of Labor Statistics, it is one of the most closely watched indicators of labor market strength and overall economic momentum. The previous number we got is 147K. The forecast is 108K. The actual data not released yet, but it is going to be released on August 1st. Now, the market expectations. Well, the economists anticipate a notable slowdown in job creation, with forecasts pointing to an increase of just 108K, down from 147K in the previous month. This expected moderation reflects growing concern about slowing demand in several sectors, tight credit conditions, and broader sign of decelerating economic activity in the USA. Now, the potential market impact on the euro dollar is, if the NFP is higher than expected, we're expecting 108K number, a stronger than forecast print would indicate continued labor market resilience, likely strengthening the US dollar. This could push the euro USD lower as markets price in reduced chances of Fed rate cuts or renewed hawkish commentary. Well, as far as the euro dollar is concerned, euro dollar is already trying to fall over here. You can see price just keep falling over here. We even got the break below this support area as well. Okay. Now, if the NFP matches the forecast, a result in line with expectation may have a limited immediate impact unless accompanied by surprise in related metrics such as wage growth or the unemployment rate. In this case, attention may quickly turn to Fed's tone in upcoming statements. If NFP is below the forecast 108, a weaker result would suggest labor market cooling and increased speculation around future Fed easing. This would likely weigh on the dollar and lift the euro USD in the short term as risk sentiment adjusts. So the overall analysis is, with the Federal Reserve continuing to emphasize data dependency, the August NFP news release will be pivotal for shaping monetary policy expectations. Surprises, whether positive or negative, could trigger volatility in euro USD as traders reassesses the US economic outlook. So the conclusion is, in the lead up to the release, Euro USD may remain range bound. We might get a small push to the downside as markets await confirmation of employment trend. Once the job data is published, a stronger report could pressure the euro, meaning euro dollar is going to drop, while a disappointing figure may provide short-term support for or a bullish price action in euro USD currency pair. Okay, current week's market trends. We're going to discuss the Euro USD, Australian dollar. I'm going to discuss the British pound versus US dollar and the spot gold. So let's start with the Euro dollar first. Euro dollar right now it's falling down, and the way I see market is probably going to rise up a little bit over here, and then it's going to continue the decline. So the way I see Euro dollar currency pair, it's probably going to price as a short-term pullback and then expect further weakness in price action of Euro USD currency pair. Next one is the Aussie dollar, AUD USD currency pair. So let us take a look at Australian dollar. Aussie dollar, it's trying to test this upward sloping trend line, and the way market is falling down, we are most likely going to get a break down over here. Okay, the way price action is falling down is trying to test this bullish trend line over here. It could rise back up from these lows, but we're getting these consecutive bearish candlesticks, so the chances are high AUD USD is going to drop further. Next one is the GBPUSD currency pair. Okay, here's a chart of GBPUSD. Now I was expecting a pullback, but we did not exactly get a pullback all the way up to 1.3629 level. Price actually dropped uh, from this area. It missed this level with the margin of about 50 pips over here, and we got a new low in price action. Now if you check out the support and resistance, here's the support down over here, and the way market is falling down, it is probably going to show us a bearish candlestick close in daily time frame. Now this thing is obviously going to tell us that market is probably going to rise up somewhere over here. Okay, and then expect further weakness in price action of GBPUSD currency pair. So wait for a pullback, and then market is probably going to drop over here. Next, let us take a look at spot gold. Okay, spot gold. Let's go to the chart of spot gold. This is the chart of spot gold. Spot gold, the way I see market is probably going to move sideways. This is the weekly chart. Let's go to the daily. Daily time frame. We got a breakdown. This is a clear breakdown over here, and this thing is telling me that market is probably going to move up a little bit, and then it's going to drop further. So market is going to drop the way I see, but it's not going to drop like a straight line. People usually expect that if gold is falling down, it's going to drop like this way. Even if you check out the left hand side area over here, let me show you. We got this first leg, and then we got the pullback. After a pullback, we got the second leg, a bearish second leg. So if I take all of this information, even if gold is going to drop, expect a short-term pullback in gold. We might get a decline today, uh, but after that, price action in gold is most likely going to rise up. Okay, so this means if the XAUUSD, the spot gold is going to rise up, this rate is basically gold versus US dollar. So if spot gold is going to rise up, then it means the dollar is going to turn weak, at least on a short-term basis. Okay, so this also means that Euro USD is probably going to provide us a short-term pullback, and then it's going to drop further. Let me change the color over here. Okay, so this is the expectation, and same goes with the Aussie dollar. Let me show you the chart of AUD. So if AUD USD is going to drop, um, the way I see market is going to drop a little bit more first, and then expect a pullback. The pullback is going to provide us a chance, mainly, you know. So expect a drop in price action, then expect a pullback, and then market is going to drop after that. Okay. Okay, so these are the insights. So what we have learned today? Well, we discussed about the GDP related to Canada, and we also discussed about the NFP, non-farm payroll data report related to USA, and we also discussed the euro dollar, AUD USD, GBP USD, and spot gold. So these are the assets to watch out for profits. What you should do next? Well, you can stay tuned for the schedule of next week's trading webinar. You can subscribe to our social media pages to stay updated. And if you want to learn more about trading, visit TradeGeek and access free trading courses for beginners, intermediate, and expert traders. Thank you for hanging around. See you at the next trading webinar on Tuesday, August 5th, 2025. So that's it for the timing from my side. Have a nice day, and bye-bye.